But we might be in trouble. Yeah. When I'm saying in trouble, I'm talking about the stock market, obviously, and you're going to tell me, well, I could see that. Yeah, I know. But things could get dicey. And let me explain to you what I mean by that. Um, what I'm talking about is the fact that we have four reasons why we need to be worried about. Um, the first reason you need to be worried, and when I say worried, I am talking about, you know, major changes in terms of what is going on. Yeah, I know Trump is saying a lot of things, and people are saying, "Well, you're not telling us. I'm confused. Explain to me again." Yeah, I'm not talking about that. I'm talking about black swan events, right? And black swan events are basically events that nobody is predicting unless you listen to this channel. But you don't you predict it, but and that's the issue, right? When you and it's bad, and when it happens, it's really bad in the market because the market does not like surprises. And you've seen what happened with the Trump tariffs, right? Basically, Trump kept surprised everyone with the tariffs, and you could see what happened in the stock market. Now, what the four things I'm concerned about is the U.S. seems to be bent on pulling out. Right? What I mean by that is basically pick up the phone, calling Europe, and said, you know what, you got to defend yourself. We're not going to spend money on you. Talking to NATO and basically saying that we're not going to. That that's understandable. Understandable that you don't want to spend all that money for all these people. But the thing is, if you are pulling out of all these areas, the U.S. was really known to be involved. Of course, it's expensive. Then what are you doing? So basically, what we're saying is Europe, you got to spend your own money. I mean, from a person in the street, it makes sense. Well, let them spend their own money. Yeah, okay, fine. Then go ahead on your own. Don't bother us anymore. Leave us alone. Fine. You know what? I'm going to give you tariffs. If you're not going to pay for the tariffs, then go do business with someone else. Because the thing with the tariffs is forget the inflation and all that. The point is that you tagging them 25% and tell them come over. They say I don't want to come over. I want to stay where I am. Well, then 25%. But you know what? Then I am going to find someone else to sell my products to. So you're losing those people as well. Of course, you're going to say, but where else are they going to go? Well, that's kind of the argument, right? That the US, with 300 million people, you cannot ignore. But be careful. You don't want to push that one too hard because even the market is telling, listen, I don't like what's going on. I don't like the idea that somehow we're becoming irrelevant and we won't know what's going on at the end of the day. Now, also, we're spending a lot of time trying to save money with the Doge, right? Because we owe a lot of money. Now, I'm sure Elon Musk, and I'm not take a look at my video that I did with Tesla and Elon Musk, and the fact that this is really really underpriced, and unfortunately the market did not like what it saw, and it's now associating Elon Musk with Trump and everything that's going on, and it's very negative. So they just don't like the stock anymore. Anyway, the point is that can you truly say, can you truly say that you will get enough money from Doge and firing all these people to make a dent on the $37 trillion of debt, which is it's a bullet now. That's a bullet. That's heavy. No, you're not. That's just not going to happen. If you want to take care of that 37 trillion, You need to take care of the entitlement, Medicare, Social Security, big items that no one wants to touch. Now, of course, if you're the layman in the street, right, walking around, and they tell you, well, I'm going to save some money because we owe too much of it. Yeah, yeah, go ahead. What, billion? What, 10 billion, 2 billion, whatever. We owe 37 trillion. 37 trillion. 1,000 billion is a trillion. We owe 37,000 of those. Okay. Yeah, you're going to save, I don't know, 500 billion. That's one, not even half. Now, of course, when you start talking about let's bring $5 million per person coming into the U.S. and we give them, and then if I get 1,000 people, that's $5 trillion. Yeah, I mean, okay, but let's be serious, right? What are they going to come here for? Because on one hand, you're saying, I want the U.S. to be the U.S. exceptionalism, so you want to join the U.S. But the other end, I'm saying, don't leave us alone. So which one do you want? If you want the people to come here, then you got to spend the money. I don't want to spend the money. Well, then you don't want to be relevant anymore. And that's fine. It's okay, right? So you could save money, but you're not going to say it's $37 trillion. So, and in the process of making those deals, I could see from Europe perspective that the US is losing its luster for the benefit of the US. Great. The thing is, don't forget, you owe $37 trillion. Where do you think the money is coming from to finance that debt? Right? Not coming from the US. So if if the rest of the world, feels that the US is not part of the is part of anything, is as pulled out, therefore we don't need dollars to be involved with the US. So therefore we don't need to fund your debt. That is something that you need to think about, that you keep poking at the bear. By poking at the bear, I'm saying not spending any money on defense for them, getting involved, don't want to spend any more money on Ukraine, for whatever reason, no spending money on NATO for whatever reason, not spending protecting Europe for whatever reason, increasing tariffs, uh, and doing all these things which are alienating everyone. Now, of course, it's nice to have a sheriff in town when the sheriff is spending all the money, and you say, "Yeah, I'm your friend." You have to understand Trump's point as well, which is a good point. Is enough is enough. Plus, we owe a lot of money, and we need to. The thing is, you got to decide how far back you want to pull out. And now, of course, the 200% tariffs on wine, and because they tax the bourbon out of, I don't know, Midwest somewhere. That's kind of weird because it's impulsive, right? You have to think that whatever you're doing, you're changing mindsets, which has been around for years, years in Europe. Now you're saying, don't look at the US, don't look at us anymore. Go look at yourself. So that pullout is going to have an impact. Okay. Of course, you're assuming that that's not going to have an impact because they're going to come here and do business with us because they still want to do business with us. Let's see. Maybe there's another option out there. One thing that they bring up all the time is say, no, we have to do this because the cause, for example, there's no U.S. cause in Europe. It's true. When you drive around, you don't see that many Fords and GM and even Tesla. You don't see that. Well, here, you see lots of German cars, right? Well, that's a proof that yeah, maybe it's more expensive for us to do business over there, or maybe we're just not that competitive. Okay. I don't know exactly the answer to that question, but the point is, there's a shift, right? That's number one. Number two, the uncertainty has got to stop. And when you hear the people, the administration working for Trump, you could see every time they open their mouth, they always say that, well, thanks to Trump, this, and they had the Secretary of Commerce, and he didn't like what they were what Bloomberg was telling them. which I could understand Bloomberg's point, which is, I mean, they're a bit of a bent to the right. I mean, to the left, quite frankly. But it was a valid question, and the answer was no. I'm not going to answer this question. This is fake news. Okay, so then we're not talking. So all we're doing is we're just throwing points, meaning that the U.S. is the best. We're going to do this. We're going to do that, and they're going to join us. It's going to be the greatest. Don't listen to the naysayer. Okay, fine, but at some point you need to answer questions. The thing is, for everyone, where are you going to get that information? It's very tough because it's really really polarized, and got talking points. I mean, if you go on CNN, it's just, I mean, they'll grab at anything that shows that there's a problem. Okay, not that there is not a problem, but you need to see both sides, which is very difficult to see. So the uncertainty's got to stop because that's creating uncertainty, and the market hates uncertainty. And our goal in this channel, don't forget to subscribe and don't forget to like. The goal of this channel is to actually make money in the stock market. In this case, it's not really making money in the stock market, it's avoid losing money in the stock market. Let's take a quick break and let's see what everyone is up. Um, that's because even though, even though today, let me show you this. Okay. Even though today, as you could see, University of Michigan consumer sentiment right there, right? It's 57, and then CNN jumped on that and said, "You see, oh Lord, oh my God, look at this. The expected was 65, 57. We are the consumer sentiment. We're losing the consumer." Well, are we losing the consumer? And that's what I mean by being polarized, because the market doesn't. The shutdown was averted. Now, of course, I make a whole class about what caused this? Is it the fact that the shutdown was averted? Well, it's correlated, but I'm not so sure if it's causing it. Okay, which is always a question. And you could see what's going on in the market right now, and it's okay today, but who knows what's going to happen next? And what's going to happen next is going to depend really much on what the administration is trying to do. Okay, so back to our story. The pullout is no good. The uncertainty is no good. What else is no good? Well, the debt. The debt is no good. 37 trillion. I did a video on this in the past, fourth quarter last year. How long can it go on? Well, it goes on as long as someone is willing to refinance you. Once they stop refinancing, obviously they need to refinance you because otherwise they don't get their money back. They need to refinance you because they need dollars. The U.S. is a reserve currency so far. Um, they're trying to be replaced by the BRICS country, but I don't think it's working too well. The U.S. has the most wonderful thing that the U.S. has going for it is it's a country of laws. I mean, we had Washington and we had John Adams, and we had these people and these great minds at the beginning that really founded some very strong foundation that still live to this day. And that has a lot of value, believe it or not. That's what you're buying when you come to the US. It's a country of laws. But now, somehow, things are changing. Um, I guess they have to change. Okay, fine, because people wanted it to change. But the debt is number three. Number four is Europe. You keep poking at Europe. Yeah, I know they look stupid and they can't do anything. It's true. They met a bunch of people. They weren't even part of the discussion with Zelensky and with the Ukrainian and Russian war. They say they're going to spend money and to help the Ukrainian, but that's not really happening right now. The U.S. is calling the shots still because with the weaponry. But the point is that you might be losing Europe as an entity. There's a lot of disgruntled employees there, and what this could mean if you lose Europe, but you lose a customer because they're all saying, "Hey, look what Trump is doing. America first. How about France first? How about, you know, Italy first? And it's been happening because a lot of the people, a lot of presidents that have been elected there are on the right side, right? And if they're not, when they did the elections again, they did the voting again to see for their parliament in Europe, Germany, France, France first, Germany recently. It's kind of a split thing, meaning that you've got the people to the right, the people to the left, people in the middle, 30, 30, 30. Not 50%, you know. Some people are saying, you know, we want to be our own. Look, it's working for him, and so far, why should? So there's this thing that's crackling into something else. We don't know what's going to be inside when it opens up. Hopefully, it's a good thing. So you got four items that you need to worry about, and you know what? You say, well, as long as companies are making money, yeah, but the problem is with the stock market, is that the multiples. Okay. If you could make the same amount of money, look at Tesla's making the same amount of money. We're back down to where we were before, as I said in the previous video. So the market perception is extremely important. The market valuation is important. I'm paying. I used to pay, I don't know, $37 for dollar of earnings. Now I'm paying maybe 25, and that's a P ratio, and it has gone down a lot. So and don't forget, we are now in correction territory. I mean, the market went down by 20%. Once you go to that level, you're saying, hey, maybe that's a new normal. And it happens very quickly. And what caused it? Well, everything caused it at the same time. And don't forget, we're not even talking about inflation. Okay. We're not talking about recession here. It's too soon. But again, you have to be careful because if you lose a customer, and recently I did a video on small business concerns, and it's been going up as well. So let's watch this market very carefully. Let's understand what's happening, and let's make sure we don't make any mistake. And by all means, it is time to protect your portfolio.